Now, when the drilling and the seismic data acquisition cost have come down, and the acquisition costs of the equivalent contingent resources have gone up, it makes sense to explore. The company said it could still make acquisitions if opportunities arose, but declined to make any projections on how many barrels it could buy. Acquisitions, inorganic growth, contributed more than 500 million barrels of oil equivalent, BO, in resources in 2016-18, according to the calculations based on the company's annual reserve reports and investor presentations. Aker BP's own exploration efforts during that period were far smaller. The firm added 148 million BO from discoveries, 83 million in 2016, 10 million in 2017 and 55 million last year. It cost $1.10 a barrel after tax to find new resources last year. The company, controlled by Norwegian billionaire Kjell Inge Roak and 30% owned by BP, said in January it was hiking its exploration budget by 40% year-on-year to a record $500 million in 2019 and planned to drill 15 exploration wells. It aims to find around 100 million BO net in 2019-20. Its sharpened focus on exploration is, to some extent, emblematic of a wider industry trend of companies beginning to step up drilling efforts, which were curbed after the 2014 market crash, as a result of technological advances and stronger oil prices. But Aker BP and other firms, including Sweden's London Petroleum, Norway's largest firm Equinor, are facing a similar challenge. Discoveries on the Norwegian continental shelf are getting smaller and smaller. Industry change. Aker BP's strategy during the downturn contrasted with that of its closest rival on the continental shelf, fellow mid-tier player London, which stuck to a plan of organic growth via exploration. London added only 21.5 million BO from discoveries in 2016-2018, its investor presentations showed. London's share price growth has lagged Aker BP's, but the stock has still doubled since 2016, bolstered by reserve revisions at the giant Johan Sverdrup field, which the firm found in 2010 and is due to start producing this year. Aker BP's exploration push reflects a sector-wide change in investor sentiment, according to Teeter Sveen Nilsen at Sparebank 1 Markets. French oil company Total is launching its biggest exploration drive for years in 2019, for example, while Chinese oil majors are also stepping up drilling. New prospects. Aker BP's CEO Hersvik said a lesson from past exploration failures was not to put all bets on one or two areas, and to do better homework to pinpoint the best spots to drill. The company said it would spend about 40% of its exploration budget targeting new prospects, while 60% will go to drill near its existing hubs. Gloerstad Clark also said Aker BP was working to better visualize its drilling and seismic data using specialized software, but this was taking time. The Norwegian continental shelf is proving an increasingly challenging environment for explorers. In 2011 to 2017, discoveries averaged under 10 million BO, compared with about 110 million BO in the early years of Norway's oil industry in 1966 to 1980. Aker BP started out in 2016, when Norwegian oil firm Det Norsk bought British major BP's Norway business in an all-share deal, with BP taking a 30% stake, 2 years after Det Norsk acquired the Norwegian assets of Marathon Oil. Jefferies analyst Mark Wilson said Aker BP's shift towards exploration was a logical step in the company's development, helped by Norway's favorable tax regime. It's a natural evolution that makes sense, but the proof will be in the pudding, he added.